Friday has dawned brightly for the crypto sector and a push to the upside is taking place. Bitcoin about to start next rally? If stock markets fall, then this is certainly transferred to the crypto market, and being high-risk assets, they are likely to fall hard. However, there are still fluctuations in markets, and they go up as well as down. After 5 days of sideways action, Bitcoin is rising once again. Bitcoin found support towards the end of September at the $26,000 level, and has been steadily trending upwards ever since. At time of going to press, Bitcoin is once more at the $27,600 resistance level. And finally taking this out and flipping it into support would be an important step in Bitcoin's climb higher. Of course, there is still the thorny issue of the 200-week moving average just above, which previously stopped Bitcoin in its tracks at $28,000. However, the trend is still up, and if Bitcoin keeps knocking at this level, it is likely to break through eventually. Ethereum strong. If the alpha beast of the crypto jungle rises, then the altcoins will normally follow. Ethereum is having a strong day so far, and is currently butting up against resistance at $1,630. However, it does appear to be breaking the downwards trend from October 1st, so look to $F to perhaps also break resistance. Solana up ahead of conference. Solana is having an even better day thus far, 3% up currently. Sol is heading back to $24 at a fast rate of knots. The Solana community has its Breakpoint 2023 conference coming up at the end of the month, and this perhaps why Sol is moving strongly up again. A bullish flag has been forming since the beginning of October, and Sol looks to be breaking out. A measured move for the breakout would take the Sol price to $29, flipping the resistance at $26 into support. Important news for Render. $RNDR is another altcoin riding high, up 1.75% on the day. $RNDR is battling resistance at $1.75. Should it overcome this, the next resistance at $1.80 awaits, with the 200-week moving average just above. Render's founder, Jules Urbach, is speaking at the Solana Breakpoint conference. What he has to say is likely to be very interesting, although upsell the news. Reaction on the $RNDR price may also be likely, as the global financial landscape witnesses a seismic shift. Reminiscent of the 2008 financial crisis and the dot-com bubble burst, alarm bells are ringing in the bond market, alerting the Bitcoin and crypto market as well. Is a crash like 2008 looming? Renowned chartered financial analyst, CFA, Genevieve Ropdector, highlighted the striking parallels in a recent tweet, stating, "I can't believe I am saying this, but the slump in 10-year and 30-year bonds is approaching the epic drops we saw in stocks during the 2008 financial crisis and the dot-com bubble bust." Bloomberg Surveillance's Lisa Abramowicz reinforces this grim narrative, pointing out that bonds maturing in 10 years or more have slumped 46% since peaking in March 2020, just shy of the 49% plunge in US stocks in the aftermath of the dot-com bust. The rout in 30-year bonds has been even worse, tumbling 53%. OnRamp, a Bitcoin asset management platform, adds further context by emphasizing the historic nature of the trend. This decline, particularly in bonds with maturities exceeding a decade, harkens back to market downturns like the dot-com bubble collapse. Federal Reserve's resolute stance on inflation and a fragile fiscal environment have disrupted the traditional appeal of long maturity debt, raising questions about the possibility of a debt spiral. Situation is further complicated by the behavior of the yield curve. Historically, an inverted yield curve has foreshadowed recessions. However, the recent correction has seen a rare bear steepener, marked by rising long-term yields. This phenomenon, seen in the past before recessions, raises concerns of an impending economic downturn. While some question the yield curve's reliability as a recession indicator, the current bear steepening suggests that an economic downturn could be imminent. This is particularly concerning given the Fed's ongoing commitment to restrictive monetary policy, making the situation ripe for potential market volatility and economic uncertainty, Dylan LeClaire from OnRamp notes. Meanwhile, Barclays analyst Ajay Rajadhyaksha suggests that only a stock market crash could halt the bond market's decline. Unlike previous cycles, traditional bond backstops are dwindling, with the Fed shifting from a net buyer to a net seller, and foreign institutional buying slowing. This highlights the stark disconnect between equity valuations and long-end bond rates, with stocks having significant room for devaluation before bonds stabilize. And if stocks crash, Bitcoin and crypto could be just as affected. Impact on Bitcoin and crypto. The turmoil in the bond market has far-reaching implications, including its impact on Bitcoin and crypto. Remarkably, the crypto market has never experienced such a situation, but there are general observations of how risk assets have reacted in such environments in the past. First, rising treasury yields make risk-free returns more attractive, potentially prompting some investors to reallocate capital from risk assets like Bitcoin and crypto to treasury bills. This shift could decrease demand, putting downward pressure on their prices. Moreover, a sharp rise in 10-year treasury yields can signal a tighter monetary policy, weighing on risk assets. Higher yields also mean higher borrowing costs, which can impact crypto. When interest rates rise, non-interest-bearing assets like Bitcoin may seem less attractive compared to yield-bearing assets. A significant increase in treasury yields can also lead to reduced liquidity in other financial markets, such as the Bitcoin and crypto space. Institutional investors facing liquidity constraints may liquidate more liquid assets like BTC and altcoins, causing potential price declines. Lastly, sharp yield increases can create volatility across various asset classes as investors seek to reduce risk or cover losses elsewhere. Bitcoin and crypto are highly influenced by market sentiment and speculative behavior. The market's interpretation of rising yields can sway investor behavior, impacting crypto prices. Accordingly, Charles Edwards, founder of Capriol Investments, recently predicted the 10 years is up another 10% since the Fed wants more unemployment. The job market is still too strong. They've raised the expected 2024 rates as a result, and the 10 years has broken out to new decade highs. As long as the 10 years is breaking upwards like this, risk assets are going to see further headwinds. At press time, BTC traded at $27,576. Bitcoin could be at risk of a short-term reversal following recent price bumps, while the dismal performance of ETH's futures exchange-traded funds, ETF, weighed down on crypto majors. Bitcoin continues to tend to sell on growth, failing to make a fresh attack on the 200-day moving average. FX Pro senior market analyst Alex Kupcikvich said in a note to CoinDesk, Bitcoin has recently outperformed the stock market but is now retreating against the buying in the indices. In the short term, Bitcoin seems more at risk of falling than rising, the trader said, adding Ether's bearish performance did little to boost confidence in top tokens. Ether and Bitcoin were buoyed to one-month highs last week as 6 ETH ETFs went live in the US earlier on Monday, with traders expecting high demand for the products. However, their performance told a different story. Less than $2 million were traded across the various ETFs on Monday, with poor volumes throughout the week prompting analysts to write down their bullish outlook and pivot to Bitcoin investments instead. Such sentiment weighed on prices, with Ether losing nearly all gains since the past week, while Bitcoin has generally hovered above support levels. Crypto majors moved little in the past 24 hours after profit-taking earlier this week and a lack of catalysts. Bitcoin slumped 0.5%, Ether slipped 1%, while XRP and BNB chains BNB were little changed. Cardano's ADA tokens were the only majors in green with a 2.2% price bump. Elsewhere, Toncoin surged 8% on no immediately apparent catalyst, while Avalanche AVAX tokens continued gains from earlier this week with a 4% jump. Bitcoin price is struggling to rise above the $27,800 resistance zone. BTC could extend its decline if there is a clear move below the $27,200 support zone. Bitcoin is struggling to start a fresh increase above the $27,800 resistance zone. The price is trading below $27,700 and the 100-hourly simple moving average. There was a break below a key rising channel with support near $27,650 on the hourly chart of the BTC-USD pair, data feed from Kraken. The pair could start another decline if there is a close below the $27,200 support. Bitcoin price faces uphill task. Bitcoin price attempted a fresh increase from the $27,200 support zone. After a downside correction, BTC managed to recover above the $27,500 resistance zone. The price climbed above the 50% fib retracement level of the downward move from the $28,565 swing high to the $27,189 low. However, the bears remained active near the $28,000 resistance zone. The price struggled to settle above the $27,850 level. Bitcoin got rejected near the 61.8% fib retracement level of the downward move from the $28,565 swing high to the $27,189 low. It saw a fresh decline below $27,500. Besides, there was a break below a key rising channel with support near $27,650 on the hourly chart of the BTC-USD pair. The bulls are now protecting the $27,200 support zone. It is trading below $27,700 and the 100-hourly simple moving average. Immediate resistance on the upside is near the $27,650 level. The next key resistance could be near the $28,000 level. A close above the $28,000 resistance could start another increase. In the stated case, the price could rise toward the $28,500 resistance. Any more gains might call for a move toward the $29,200 level. More losses in BTC. If Bitcoin fails to continue higher above the $27,800 resistance, there could be more losses. Immediate support on the downside is near the $27,400 level. The next major support is near the $27,200 level. A downside break and close below the $27,200 level might push the price further lower, toward $26,800 in the near term. The next support sits at $26,200. Technical indicators. Hourly MACD. The MACD is now losing pace in the bearish zone. Hourly RSI, Relative Strength Index. The RSI for BTC USD is now near the 50 level. Major support levels, $27,400, followed by $27,200. Major resistance levels, $27,800, $28,000, and $28,500.